All right, good evening, one and all, and welcome to this United Policyholders Roadmap to Recovery webinar. We are primarily, we will be talking about issues related to either the 2020 wildfires, wherever you are, but with a focus on 2021 wildfires, people who have been impacted by wildfires this year. And we're talking tonight about navigating your dwelling claim and understanding scope of loss, and we'll explain what that means. We will do our best not to confuse anyone from Colorado by talking about laws that are may not be in place in your state, but we will be giving general guidance that will be useful to you no matter where you are, no matter when you lost your home or when your home was damaged. So thank you for joining us. A little bit about United Policyholders, if just in case this is your first time joining us. We are an established charity. We've been a trusted information resource and a respected voice for insurance consumers and disaster impacted. So we've had a lot of experience in the issues that people typically encounter on the road to recovery. And we're not for profit, not for sale. We do not take funding from insurance companies, so we can keep an independent voice. But we have a lot of expertise in insurance. We're funded by donations and grants. Some of the people that help put together the program tonight, we call ourselves Team Up. That includes myself and my staff. We have a professional staff at United Policyholders. We also have government and nonprofit partners. The most well-known ones of our partners for purposes of tonight are both the California and the Colorado Departments of Insurance. Those are partners of ours. And then we have a lot of volunteers, people who lost their home in a wildfire in the past or another type of disaster, got help from us, have some nuggets of wisdom to share, and are participating in our educational program. We have Bob Hunnis with us tonight, who is sort of still on his own road to recovery, but has some unique expertise. So we invited him to join us on our instructor panel. We also have a lot of consumer-oriented professionals that help us help you. And they include those categories that you see there on the screen. We run 3 programs, the Roadmap to Recovery, under which tonight's program is being offered. And then we also give guidance on buying insurance. And then we get involved in helping troubleshoot big problems like underinsurance and other things like that. That's me. I've been a professional insurance consumer advocate since the 80s. And I'm one of the authors of the Little Yellow Book that you may have gotten after your loss, co-founded the organization. And I'm very pleased to be with you this evening. Very happy to be joined by Bob. Bob, if you want to just give a quick intro on where you live and your background.
So I live in Boulder, Colorado. We had another home in Grand County, Colorado, which my wife and son and I built ourselves 20 years ago. It was a total loss in the East Troublesome Fire. My background was in structural engineering, and I'm now working with the Grand County Builders Association as a liaison, trying to help people with their insurance claims.
Thank you. And I specifically thought Bob would be helpful here because not only has he been navigating the challenges of pricing the rebuilds, which is our main topic tonight, but because he has himself been in the construction biz and also is working with the Professional Association of Builders in his area. He's very familiar with the topics we're going to be covering. Also very pleased to be joined by Sandy Watts, an insurance specialist with United Policyholders. You can see all of her cred there. And we have a lot of slides to get through, but we also will be happy to answer some questions. So you are welcome to use the Q&A for that. And Sandy and Elise Hicks will be monitoring that to answer the questions that get posted. So just a quick disclaimer here, this workshop is intended to just be general guidance only, not legal advice. We don't endorse any of the professionals you will find on our website, but while we appreciate our volunteers, they are volunteers, so we are not here to be your lawyers or to give you professional advice. We're here to educate you and support you. So hopefully you have already visited our library that we set up for the California 2021 wildfire impacted households. We have a very similar one for Colorado with information that's customized for you. We also have a library for people who lost their homes in 2020. And the reason it matters in California when you lost your home is that we have a pretty active legislature here, and there are a number of rights that that the legislature has established in recent years, and not all of them were in place in 2020, but for 2021's, they're all in place. So we will do our best to try to distinguish what rights you have depending on when you lost your home. Okay, so we're going to cover today how the insurance process generally works with regard to a dwelling claim. And then we'll talk about calculating how you calculate the benefits that are available in your policy to replace your dwelling. We'll talk about calculating the as-was cost to replace the home you had, which is basically what the insurance company owes you, subject to the language in your policy, but generally that's the focus. What would it have cost? We will talk about your options for replacing your home, and then touch on the process for collecting what your insurer owes. And then we will go into a little bit of detail on what we call the scope of loss, meaning the set of documents that describes the home that you had, and that the insurer typically will use as the basis for what they offer you to settle on your dwelling. So our Super Sandy will be walking you through some very practical suggestions for how you get that scope accurate so that it accurately documents your full loss and related costs. So how the process generally works, there's no one size fits all. Adjusters take different approaches. Some of you may have gotten a nice big fat check already. Some of you may be waiting. Some of you may have been getting a series of checks. Hopefully you have some idea what those checks are for. But it's not, each person's experience is generally a little unique. But the common threads is how do you get from point A, where you were the day of the loss, day after your loss, to where you want to be, which is putting this whole process behind you and moving back into a home somewhere. And so just a couple thoughts I want to throw out there before we really get too deep. And why we even have to offer this program is, you may know by now, you probably do, that these days insurers very often will try to reach a settlement with you that is not based on what a builder's estimate and some contractor bids, but they will try to use a program called Xactware, that's a computer program, but it often the program doesn't always generate accurate numbers. So we are here to give you guidance on how you deal with that situation. And while we say, computers don't repair or rebuild homes, builders do, right? So a computer can only be so accurate. And we recommend being wary of an adjuster trying to rush you into a quick settlement based on a computer generated estimate, because the check they're offering may seem like a lot of money, but it might be far below what you're entitled to. Another kind of very important point to note is hardly anybody who loses a home in a wildfire wants to replace what they had with an exact same house. Most people want to downsize, or they want to do an upgrade, and that's all fine, except that it's easy to get off track on your insurance claim if you are trying to if you're not talking about apples to apples in terms of what you'd be entitled to, because really what you're entitled to is that hypothetical cost of if you did replace the exact same home, what would that cost? And that is generally what we geeks call the measure of indemnity, which is basically to say what you lost. And then one other sort of factoid to throw at you is that a lot of people really don't feel like they have the energy, time, or just drive for a major construction project. And for that reason, our organization has pushed hard to change the law in California so that you can replace your home by buying without leaving money on the table. We're not quite there in Colorado, but because it's the law in California and we're pushing for it to become the law in Colorado, we're working on that right now. We still want to empower you to negotiate as if the law did give you that right. Sandy, I'm gonna turn to you for a couple of these slides to talk about what we know from years of helping people with claims.
Sure. Hi, everyone. Nice to see you all here tonight. So we've been around for a while, like Amy said, and one of the things we know is that time is on your side. And the longer a claim stays open, the more money that is realized on the claim in general. So it's good, like she said, don't ask for, be wary of a quick push to settle a claim. You can accept what they send you, but that doesn't mean that it's over. Okay, ask for advances and extensions when you need them, and take your time to fully and accurately document what you lost, and that does take time.
And also just a note in the chat section, you will see Elise will post some links now and then to one of the publications on our website that might be relevant to what we're talking about. So these are just what we call kind of our words of wisdom to kind of just to give you our philosophy of what we've noticed has really helped people over the years. A lot of people feel, and understandably, that they got to put the gloves on and do battle with the insurance adjuster from day one. And we wanted to remind you that giving your insurance company a chance to do the right thing is a good idea, because sometimes they do the right thing. Plus, you get flies with honey. So, to the extent of a decent relationship with your adjuster, it's worth it. But don't be a pushover. And we say very often the squeaky wheel gets paid in this context. We also have observed that knowledge equals power in this context. And the more you understand about your rights and what benefits are available and how the process is supposed to go, the smoother your claim will go, and hopefully the less pain that you'll have in the process. We talk about speaking up, and that is our way of encouraging you to be effective in your approach to your claim, meaning present your request clearly in writing, explain what you need, when you need it, why you're entitled to it. We really encourage you to keep that claim journal so that there's a record of who said what to who when, especially because we know that after disasters, there's a lot of rotating adjusters. You'll have one adjuster and then they'll go back to wherever they live, and then somebody else will come, and it can be really frustrating, and it can cause delays when the trail goes cold. So keeping your own journal will help avoid that problem. And then making an extra copy of your insurance policy that you can write notes on is really helpful. And knowing that phrase, can you show me where it says that in my policy, will really help you, because a lot of times, you may be dealing with an adjuster he's young or not that well experienced or not that well trained, or they may be cranky, and they may make something up and invent some kind of a rule that may not actually be in the policy. So it's if they're asking you for something you think doesn't sound right, it's always a good idea to keep that phrase handy. Can you show me where it says that in the policy? So we already talked about the paper trail and how important that is. And these are just our suggestions for when you're communicating, when you're being that squeaky wheel who's going to get paid what you're entitled to, being a good communicator, putting things in writing, but also just trying to keep things professional. Avoid venting your frustrations. The insurance company didn't burn your house down. Maybe they're making your life harder than it needs to be. But just keeping it professional will really help you if you can, because, you have goals, right? Your goal is to get through this. So before we go into the next dive, we can just relax our shoulders and just take a deep breath. Okay. So calculating the benefits that are available in your policy to replace your dwelling. Now, Sandy's going to be going into this but in a kind of a Cliff Notes version. And if you want to really dive into how to read and understand your policy, I highly recommend that you watch the recording or just the slide deck from a program she taught last month. And at the end of the deck, we'll give you a link to that, but you can find it on our website at your convenience. Okay, Sandy, tell us, how do you figure out how much money is available in your policy?
Yeah, so the key to this is a declarations page. And a lot of times when I'm asking people if I can take a look at their policy, they send me what their policy is, and actually what they're sending me is a declarations page. So it's important to know the difference. The declarations page is the one with all the information on it. It has the your name and the amounts of each coverage, and it also lists all the endorsements and riders. The policy itself is usually a little booklet, or these days they're electronic, but it's with all of the language. So it's important. Like Amy said before, it's good to make a working copy so you can write notes and questions on there. We do have a sample letter in our library, uphelp.org/samples, that has a letter for requesting your policy. And they do have to provide it to you within 15 days in California. The declarations page is really key, but as we'll find out as we move on, there's a lot more to the policy, and right here is what it is. A lot of times I'll ask people, did they pay you? And they'll say, yeah, they paid me my policy limit. Well, usually people are referring to the coverage A limit, which is the main, it's the big bucket. It's the one that's, the most money. But it's important to remember that there's lots of other things that add up to a lot. So you've got other structures, you've got extended replacement cost, you have debris removal, code upgrades, and then there's inflation coverage on a lot of policies. So really important to sort of really sort out what you have. Okay, so like I said, coverage A is a big ticket item. And when you're talking about your dwelling, though, the amount that you're owed is, the cost to rebuild what you lost up to your limits. And those limits can include all these different things. So like I said before, you've got your coverage A, you've got your extended replacement, which is an additional amount of insurance. You've got debris removal, which is also usually an additional amount of insurance. And then code upgrade coverages and trees, plants, and shrubs. So when you start adding, 25% here, 5% there, 10% there, it really does add up. Okay, so this is a sample declarations page, and it shows you just an example of how, and I don't know if you can see my cursor or not, but here where the circle is, it's coverage A dwelling, and this is the amount, the base, we call this the base amount of your policy, okay? Excuse me, and then next to it is coverage B, other structures, you've got your personal property, your loss of use. When we talk about endorsements that are increasing the amount available, it's down here at the bottom where you can find those things. And sometimes they're really hard to find. This one here has an 150% extended replacement cost, okay? So you get another 50% on top of your coverage A if you need that. If you look down at the very bottom, there's a building code upgrade limit that adds another $75,000. So really, when you're talking about a $300,000 policy here, you add another 150 here and another 75 there, adds up to a lot. Go ahead.
So I mentioned earlier, we have a few folks from Colorado tonight. So this is a law that's just California. We haven't gotten it into place in Colorado yet, that allows you to combine your coverages it's just other structures and your dwelling. Is that correct, Sandy?
Yes, yes. I mean, you can always use your contents coverage yourself, but this, yeah, the key to this is you don't have to replace your other structure in order to release all that money. If it's damaged, you get to apply that money towards your dwelling. So that's kind of nice.
Yeah. So that would be your garage, outbuildings, retaining walls, swimming pools, barns, etc. Anything else we want to highlight here on this one?
So this is just another example. You know, it's important to know that declarations page look different, so you can look at in different areas. This one looks, if you go down to the second arrow, this is where you look to see like this personal property replacement. It just shows that some of these endorsements are a little cryptic, and sometimes you have to go search for them and see what they actually say to know what you have.
Right. So like this one has in the second column there, it says replacement cost. So since the first one says personal property replacement, then you know that the one on the right is talking about your dwelling. So that's just another kind of note about understanding what's in your policy. This is also a California specific thing. This is a standard form that your insurance company is supposed to give you when you buy it. And this is just another kind of illustration of the different types of policies that are out there. Some ACV only, those are pretty rare. Extended replacement, which was that example Sandy showed you with the 150, and then the building code upgrade. Now, for those of you who lost your homes in, well, I'm gonna put a pin in that. Okay, so Sandy, extended.
Yeah. So, and I just wanted to point out, there was a question in the chat about the laws in, that you're trying to work on the laws in Colorado to make them more like the ones in California, and whether or not they'd be grandfathered in. And it's kind of a tough question. It's usually very hard to get them grandfathered in, but.
Yeah, I think, you know, what I always have told people over the years, because California has so many more good rules in place. I mean, for bad reason. I mean, because we've had so many disasters. But you know, you can always argue it as a standard of care, meaning if the, you know, and as we said earlier, like it never hurts to ask. So you say, well, look, here's a right that I may not technically have it here, but it makes sense. And so please extend me that courtesy. So yeah, this is just explaining some of the different ways you might have extended replacement expressed in your policy. Anything you want to add on this one, Sandy?
No, just that the amounts are always different. Don't listen to your neighbor about what their extended coverage is, because they are very specific to policies. Also, some of them apply only to the dwelling. Sometimes that extended replacement coverage only applies to the dwelling. And in other situations, it applies like at the bottom to all three coverages. So look in your policy and see which you have.
Yeah.
Make a big difference.
Okay, and these are just some examples of how the language might look. And it can be confusing because math can always cause confusion. But we're going to move along. So we've got lots of stuff we want to get to. And this slide deck is always available free of charge on our website. So if there are things that you're like, what did she say? What did he say? You can catch back up here on the details. So code upgrade coverage. What's the scoop there, Sandy? Oh, uh-oh, you went on mute.
Hold on.
Okay. That's fine. I'll just cover this.
Can you hear me now?
Yeah. Okay.
There we go. So I don't know what happened.
Go ahead.
Yeah, code upgrade coverage is on most homeowners policies, not all of them. And then some added as an extra limit. And this coverage pays for things that your home didn't have before. Okay, so when they're estimating your home after you lose it, you're estimating what you lost. Well, these are actually things that you didn't have. But if you're rebuilding your house, then you have to add them now in order to bring the home you lost up to code. So it's a very important coverage. The older your house gets, the more important this coverage is. And then in California, they do allow you to use this amount to rebuild elsewhere or to buy a replacement home, even if the policy says that a lot of the policies say you have to rebuild on the same site. So in California, they've gotten around this with the statute.
Yeah. So Bob, this is something I'd like to ask you about. So with code upgrade, just like when we started out the program tonight, I was talking about how getting to that hypothetical cost of a project that isn't actually going to get built, but it is what the insurer owes you. People often have a hard time proving to their insurer what code upgrades would be required on this hypothetical made-up project that's not going to get built. So how have people been navigating that in the aftermath of the 2020 wildfires in Colorado?
So our experience in Colorado is actually kind of all over the map in that we have seen estimates submitted by some contractors that have been very brief in outline. In fact, one of them, this is a policy for a 3,500 square foot home. The contractor submitted a 1-page summary, what he called the schedule of values that broke down site work and concrete and framing and appliances and so forth. And behind each line item that he thought was appropriate, let's say it's a $50,000 line item for concrete work, he just wrote code upgrade $12,500 and went down through the whole list, not putting code upgrades behind everything, but probably a third of the items had code upgrades. They added up to $54,000 and it was submitted. And I expected that the insurance company would push back and say, we need more detail. Why is this concrete price bigger? We don't understand. They wrote the owner a check, $54,000, no questions asked. But on the other hand, yeah, that was very fortunate.
Good news story. Let's hear the bad news story.
Well, the bad news story is somebody that tried doing a similar thing, and that particular adjuster or that insurance company came back and said, well, give us the code citation. What section of the code was changed? What year was that code enforced? When was your home built? And so suddenly this homeowner is faced with, I'm going to say monumental, but probably impossible is a more realistic term, task of trying to document that. And just to give people a big overview, a lot of this depends on how old your home was and how many code changes have occurred since your home was built. I'll use myself as a bad example. So our home was 20 years old. Technically, the codes get updated every 3 years. So there were probably 7 new codes since our home was built. But in Grand County, they typically only adopt codes about every other year. So there were probably 4 major code changes that I have to deal with. That's not a trivial undertaking. I've actually I owned a lot of those building codes because of the business I was in. and I've since then purchased the other one. So I have a stack of building codes. It's about 1.5 feet tall of code upgrades, basically. And you can imagine it's not an easy thing to go through that.
No,
But we have learned that there are some big items that are worth looking at.
yeah,
And
isn't it typically like electrical, plumbing and foundation, would you say? Are those kind of the biggies?
well, electrical is certainly a big one. Plumbing is moderate. Foundation in our situation is actually not a very big item. But the biggest single item that almost everyone's impacted by is the energy codes. It's actually Chapter 11 of the International Residential Code that now mandates much improved insulation values in walls and ceilings. And a big deal is much better windows. And so in my case, I've been able to identify almost $100,000 worth of code upgrades that are just based on better insulated exterior walls, better roof insulation, and better windows. So it's not worth it to go into, if you got a $100 code upgrade item someplace, which you probably have from smoke detectors or carbon monoxide detectors, that's well and good. If you can identify it easily, include it. If not, it's not worth wasting your time chasing the $100 item when there's probably a $30,000 item in window upgrades. So you do need to be selective in pursuing code upgrades.
I'd
Yeah.
like to point out too that the insurer does have the duty to investigate and evaluate the claim. So beware of just letting them flop the entire responsibility onto you to do all that research. They have a certain responsibility to do some of that themselves.
Yeah, I think the bottom line is to prove up what code upgrades would be incurred if you did replace the home exactly as it was up to the current codes. You generally are going to need some professional information. So either, some local building departments in wildfire areas have published lists of recent building code changes that may be at issue. Or you really, the best thing is to work with a smart builder, somebody like Bob who knows how to look things up and give you numbers. So we did get a question in the chat about in California, do the code upgrades have to be incurred? And not no, but they have to be broken out and proven. And we do have sample code upgrade estimate on our website in that uphelp.org/samples that Sandy referenced. So, for most of you, if you lost your home before 2021 or you're in Colorado, you may or may not have code upgrade coverage. If you lost your home in 2021, you have at least 10% because the law required that as of this year. So these are just some examples of how your policy wording may be written. And this is again a cue for you to some examples of how challenging it can be to figure out whether you have extended replacement coverage or code upgrades. But these are some of the places you'd find it. So if generally, as Sandy was explaining, you're going to find it on the declarations page, but sometimes buried in the policy itself, you may find some language. But these are all examples right off of the declarations page. And you can see how we've highlighted on the one on the upper left, this person had an ordinance or law, which is another way of expressing building code coverage. And then the one at the bottom, impossible to really tell what that person has. Okay, other structures. So we've talked about that, that this is that second category that we mentioned earlier in California. You can combine if you need to, if you're underinsured on your dwelling and you don't care about replacing a garage or retaining other structures, barn, what have you, that whatever coverage you have in that second category, you can use towards your dwelling. Now, if you are if you were lost your home before that became the law in California, or you're in Colorado, these are just arguments you can make. You can say, I am underinsured, and I need every dollar of coverage that's available so that I can replace my home, and therefore, let's make a deal. Bob, did you have something you want to add?
Yes, I do. So it's important that you look at your own policy for the definition of other structures. And you may be pleasantly surprised that other structures include things that you don't even think of as structures. But basically, in our policy, at least, they're defined as other improvements on the property that are not directly connected with the dwelling, except by virtue of an electrical line or a plumbing pipe or something like that, that they're physically separate. And in our case, we're on a rural property, but I identified 10 different items that technically are other structures. And while some of them are only worth $500 or $1,000 each, they add up to some significant money. So just as a sort of a checklist, if it may be applicable to people, we had fire damage to a culvert in our driveway, farm gate that covered our driveway. The well head was damaged by the fire, even though the well itself is okay. And that took a lot of excavation and backfill. Power pole was destroyed. We had an outside generator building, underground propane tanks and all the lines and valves and domes. Those are significant dollars. Some shipping containers that were damaged. We actually still had an outhouse left from years ago. Our septic system suffered fairly substantial damage from a cost standpoint. And one I didn't think of until later was property line pins that had to be resurveyed. And there's a couple $1,000s right there just to hire a surveyor to reestablish where our property line had been. So all of those things qualify under the definition of other structures. So don't think it has to be a freestanding garage or some monumental structure. But for instance, just our septic system, we are pretty fortunate. We didn't have major damage, but we still spent about $5,000 repairing that.
Mm-hmm. Well, I think Bob is just illustrating, that that point we made earlier about the longer your claim stays open, the more you may find, you may learn, and you may be able to recover. And that's there, there's dollars in the details. And again, not to say that every adjuster, is lame, that comes out from the insurance company. Some of them are very good professionals, but their quality varies wildly. And since you're the one who has the biggest financial stake in restoring your damaged or destroyed assets, we really encourage you to do exactly what you're doing by tuning in tonight. Educate yourself so that if you have to explain things to the adjuster, then so be it, right? Okay, so we've been talking about other structures. Sandy, some items that are other structures under one policy might be landscaping under another. What are we talking about there?
Yeah, they talk about, some of them say hardscaping, like walkways and little cobblestones and things like that. So you just have to read it. It's just exactly what Bob was saying. Some of them put them in landscaping, and some of them put it in other structures. So
yeah. All right. So here's an example of how and insurers don't always use the same terminology, right? We're talking about how some insurers will talk about code upgrades. Some of them will talk about law and ordinance. It's the same thing. Some insurers will talk about loss of use benefits. Others will say temporary rent, or and again, it means the same thing. So, additional living expense, loss of use, temporary living expense, all the same thing. That's that category of expenses you incur because you lost the use of your home. Similar here with code upgrade, ordinance or law, separate structures, other structures, something. Okay. Next section, calculating the as was cost to replace the home you had, which is the rub for a lot of people, right? How do you do that? I'm going to give a couple of, I'm just going to sort of go through a couple of the pieces of advice that we have developed over the years. And then Bob, I'm very interested in any additions you have here. To establish your home's as was replacement costs, right? The measure of indemnity, that's what the insurer owes generally. It's can be very hard. A lot of people have lost their plans or they never had them. And there you are dealing with an exactament estimate that an adjuster is putting together. And you're trying to figure out, okay, how do we put this back together? How do we reconstruct what it would cost? And so these are just some of the considerations, right? And we have a lot of information on our website to help you with this calculation. We have samples of what are called trade summary breakdowns. These are some of the sources that people have used. Building plans, photos, Google Earth, images of your home before the fire, Zillow, any kind of, there may still be pictures of your old house. Those are some of the examples. Now, so Bob, this was one of the, this is always a challenge for people is we say, oh, ideally get 2 independent estimates from licensed reputable contractors for what they would charge to put your house back the way it was, like kind and quality, similar features, size, quality, materials, and quantity, and then work toward a settlement with your insurance company that's based on those independent estimates. Now, Bob, why is this advice hard to follow for a lot of people?
Well, the words get 2 independent estimates from licensed contractors. If you think you can do that, you're living in a dream world. The reason I say that is that in our situation, at least, the licensed reputable contractors in the area are overwhelmed with the process of estimating and rebuilding homes that have already been burned. They simply do not have the time and the staff to sit down and do a thorough, detailed estimate, which can easily cost several $1,000s in man hours to put together that kind of an estimate. So if you can find somebody that's qualified and will do that, that's great. But I think that's a very unrealistic expectation.
Yeah, I agree. And there's lots of entrepreneurial kind of people that will come after a wildfire and say, oh, we'll do this estimating for you. And over the years, United Policyholders has tried to sort of find people like that. Some public adjusters will do that. But for a lot of people, it's very hard to get these estimates done free of charge, right?
So working through United Policyholders, Valerie Brown and I actually interviewed a number of independent estimators that some of whom were public adjusters, some of whom were former general contractors. So we actually have a list of 6 people that will provide that kind of a service, usually done on an hourly basis or a fixed fee, as opposed to public adjusters, which usually work on a percentage of the insurance proceeds that the insured will receive. In any event, you probably are going to have to pay for that service. And certainly it's in the insured's interest to minimize that payment. But on the other hand, don't cut off your nose to spite your face, because if your public adjuster or independent estimator or somebody charges you $10,000 but can get you an extra $300,000 in insurance proceeds, then that's money well spent. And much of this is going to depend on the individual insured's capability to read estimates and understand building plans and express all these things, or if they don't have the time or the interest. So those outside consultants that do come at a cost can be a valuable service for many people.
I agree 100%. And the list that Bob was referring to is Colorado builders, but in California, we have a number of those outfits in our find help directory under I think it's lost estimating is the category. And again, it's a cottage industry that developed because we've been having more and more wildfires, and because there is a demand for people who can accurately estimate a project that's not actually going to get built. You know, I think when there were fewer fires, it was easier to find a builder in a wildfire area that would just do it out of the goodness of his or her heart. But I don't think that's happening anymore. So, you know, you may have to pay $5,000 or $10,000 to get somebody to do this really the kind of detailed estimate that you need in a lot of cases. And as Bob said, you know, it's painful to have to spend money to get money, but sometimes that is what you have to do in life. So, but not always. And we're going to be at the last portion of the program, we're going to be talking, Sandy's going to walk you through sort of the do-it-yourselfers approach to getting an exactimate estimate to be more accurate, so that you don't have to spend that kind of money on getting a professional estimate. But the do-it-yourselfer approach is not for everyone. So when we talk about a scope of loss, and this is just a quick hit here before we go a little deeper into it. A scope is just when we use that in this context, we're talking about a set of documents. It often includes pictures, drawings, and lists and numbers that describe the dwelling as it was before the fire. So when we talk about scope, we're talking about a package of information that states, as you can see on the left there, sizes, quantities, etc. And again, in that example on the left, you can see it under wood window, high grade. So not only is it saying how many windows, but it's saying what kind of quality they were. So we've been covering this since we started this evening, that insurance adjusters mostly use Xactimate, and you may already have gotten a check for possibly your entire policy limits may be depreciated. And very often that happens when you're severely underinsured, and the insurance company is just basically, they know that, and they're just trying to kind of throw money at you, hoping that you will take it and move along. But if you are in that very common category of being underinsured, and I know we have a couple people in the question in the chat that have already talked about that, we have done, and we will do another separate class just on remedies if you are underinsured, and different avenues you might want to try. But we are not going to go into that in great detail tonight. However, if you are underinsured, if you think you are, or you know you are, you still are going to want to know how underinsured you are, because there are different reasons why it's still worth recreating what it would cost to put the house back, even if you know that you don't have enough insurance to cover that project. And the reason, there's lots of reasons. One is for tax purposes, if you have an unreimbursed loss, or to offset any kind of a gain, which can be a problem when your property appreciated a lot over the years, as things real estate does in California. So again, even if you're underinsured, it's still important to try to figure that as was cost. All right. We've already hit this. I don't think we need to hit it again, other than to say that most real life builders don't use Xactimate to price a job. They use bids from subcontractors, and they use their own knowledge to do it. But the reality is that a lot of times the kind of an estimate that you get from a real life builder is not going to have the level of detail that insurance companies have trained their adjusters to require. And it's very hard to compare the unit pricing in an exactimate estimate with project-based real life pricing the way builders do that. So actually, Bob, before we leave this point, I think your communities have learned some lessons the hard way about the challenges of exactimate. And would you say that in your area, have a lot of the builders started to try to figure out how to use exactimate so that they can help their clients get settlements?
No, at least I'm not aware of any builder that's even attempting to learn Xactimate, because it does not work with their business. It almost has to be a whole separate side hustle that somebody would do, and nobody has the time to do that. So builders are typically looking at Xactimate to just get an overview of what the insurance company has done, but they're using their own in-house estimating software or techniques to come up with what they consider to be a legitimate price to rebuild that home.
So we have, I know we have a question about ACV, actual cash value, and we are about to get into, well, actually, not the next section, but the one after. So now we're going to cover, we're going to go a little bit into options for replacing your home. Basically, you have four, although it really does depend somewhat on where you live and also what kind of adjuster you're dealing with. But generally, you can rebuild the house as was, rebuild a different house, on the same lot, buy elsewhere, or rebuild elsewhere. And again, those options are not available to everyone, but those are, in theory, those are all your options, right? That's a decision that a lot of people take a really long time to make, and that's okay. And a lot of people will kind of change their mind as they go through the process. In the beginning, sometimes it's hard to imagine trees coming back and you just are thinking, I don't think I could live here again. But then it's amazing how nature will rebound, and maybe some of your neighbors are deciding they're going to come back, and then maybe you think you want to, but it's okay to kind of figure this out over time, as long as you're continuing to try to reach an agreement with the insurance company on that as was cost. So we've talked about how California has really innovated through legislation to make it very clear that if you exercise any of those four options, you're not going to leave insurance money on the table. That is not the case in Colorado. It's much more of a negotiation for people in that state. Much harder if you're in Colorado to be able to get every dime out of your policy if you are buying a replacement home. But in California, we've worked really hard to get the laws so that you don't have to actually replicate the original house to get code upgrades, extended replacement, and all that. So if you want to buy or rebuild not on your lot in California, again, there's a code section now that is pretty clear that RCV, replacement cost value, you get. So even towards the purchase. But again, all roads lead back to what was the cost of that as was? What would it, if you did rebuild, what would it have cost? Because that's the measure of what the insurer owes you, no matter what you want to do, whether you want to negotiate to take that money and buy, or you want to negotiate to take that money and build a different house. No matter what, you still have to get to that agreement with your insurer. Anything, Bob or Sandy, you want to add on this point?
No.
No, not really.
All right, so here's the code section in California that lays it out very clear. So just a few little tips on making this difficult decision on how you're going to replace your home and where. How much insurance do you have? Is it enough to replace the home you had? Do you want to replace the home you had? And then if you're underinsured, what are your options? When we teach the class on underinsurance, it's kind of a lawyer focus. We're talking about, could you force the insurer to pay more than they want to pay you based on legal arguments. But for a lot of people that don't want to go that route or don't have really good arguments, legal arguments, then your options are you build smaller, cheaper, or creatively, you buy instead of rebuild, and or you get a loan, or you use your savings to make up for your insurance shortfall. Anything to add here, Bob?
No, I think that covers it.
Okay. So yeah, buying versus rebuilding, the process is almost identical in terms of figuring out how much the insurance company would have owed you if you had rebuilt. And then, Sandy, you want to kind of walk us through any of the nuances here on this slide for people who want to take their money and apply it to buying a house?
Absolutely, absolutely. One of the things that is so important is that the process is identical in terms of valuing your loss. Okay. And so it's really, really important. The most important thing for everyone is to know how much would it cost to rebuild the house you lost, how much are the code upgrades for the house you lost. And you really need to come to an agreement with your insurer about that before you make any decisions. So that's really important. And I'll talk about that a little bit more, but that's key. So even if you have no intention of rebuilding, you still have to have an estimate for the home you lost. Seems counterintuitive. It's just the way it works.
Yeah. And you can see here on this slide, we say newish California law, often misunderstood by company adjusters. And that is as true a statement as ever there were. A lot of adjusters just they don't know about the law. They are responsible for knowing the law. They're supposed to be trained in all the laws. But the reality is sometimes they are not, and sometimes it's on you to educate the adjuster that the insurer has assigned to your claim. So, so there you have it. All right. I think we've kind of covered this pretty well, except for one point. One of the games that insurers have been playing that hopefully we have put an end to in California, and we're working on putting an end to it in Colorado, is they've tried to say, well, okay, great, you found a house and it costs the same as the house that you were going to that you would otherwise be rebuilding, apples to apples, but the new house is on a second lot, and so therefore we're going to deduct the value of that lot from what we give you to spend. And we have always thought that was not fair. We've always said that they should not be allowed to do that. But it took us going to the legislature twice, actually 3 times, who's counting, to really nail it down so that insurers could not make any more arguments about deducting the value of land. So now it's clear, but only this year. So if you lost your home in 2020 or you're in Colorado, you may still be grappling with this issue. And I would encourage you to go to our website and poke around a little bit. You can put in the search box land value or land deduction. We have some, I think, pretty good logical arguments to why the insurer shouldn't be able to do that no matter what the law says. So just on a practical level, how do you buy a replacement home? Generally you want to reach that agreement with the insurer that we keep pounding on, that as was, and then you look for a house that costs about the same. You present that real estate documentation to the adjuster, and hopefully you're off to the races. So collecting what your insurer owes. So the process, and this is where we're going to answer that question. So Sandy, you want to walk us through how typically this works? And it's not always, this isn't always how an adjuster is going to approach your situation. Sometimes an insurer will not make you jump through these hoops, but generally this is the process.
Yeah, so hopefully all of you at least have some sort of a substantial payment by this time, and that you've received in advance of certain things to get you through, say, additional living expenses. In all cases, California does have a law saying that the carriers are required to provide you with a detailed estimate of your damages within a reasonable period of time. But that's also just part of the standard and practice of insurance claims adjusting. So really that applies to every state. And they should be paying you the actual cash value of your property that you lost as soon as it can be reasonably determined what that amount is. There's different rules for what actual cash value is. It's in most states, it's replacement cost, full replacement cost less reasonable depreciation. And then they hold back that reasonable depreciation and reimburse you once you've actually repaired or replaced the damaged property. So those are the three little boxes we have there.
And, you know, a lot of people trip over these things. Well, for one reason, because it involves math. Another reason that the rules are a little, they seem kind of unfair. You know, like why? Because there's no set depreciation schedule, and different insurers use their own, and that can be it's subjective, you know, how much they depreciate, but it is what it is. This is the process, and so understanding it will help you navigate through.
And Gary just asked, is there a statutory definition of reasonable depreciation? And the answer to that is yes. Now we do have one. Insurance Code 2051 talks about it, talks about what they can only depreciate items that you would normally be subject to repair or replacement during the normal life of a home. So that's Insurance Code 2051. There's also in the claim regulations, it talks about reasonable depreciation as well in the California Fair Claims Settlement Practices regulations. Sorry, that's California again.
And then, you know, there's one area where insurers, where we've been kind of doing battle. One of the areas where we've been doing battle with insurers is on if they try to depreciate labor, because you can see here, and you heard what Sandy just said, that, you know, depreciation is supposed to be the reduction in value due to wear and tear, right? And there's some things that just don't lose their value, like antiques and labor, for example. Labor never gets any cheaper, it gets more expensive. So we're always fighting with insurers, or policyholders are often fighting with insurers over saying you're not allowed to depreciate labor. And that's, we've had a couple wins. United Policyholders, in addition to doing these classes, we also do quite a bit of advocacy work. And so like we file briefs and lawsuits around the country where these issues, somebody has taken an insurer on, and we will, you know, we will weigh in, we file what are called friend to the court briefs. And we got a really good win recently in the Illinois Supreme Court saying insurers cannot depreciate labor. And then just today, we got word from the Washington State Insurance Department saying that they put out a regulation saying that insurers can't depreciate labor. So it's a battle. Bob, is that a battle that that you or any of your folks have been fighting in Colorado?
Amy, I don't have any personal experience with that, so I can't speak to that. I suspect it varies a lot from company to company, and
Yep.
probably from adjuster to adjuster.
Yep.
In fact,
Yep.
one of the things that I think has really become apparent in our situation in the East Troublesome Fire is that the quality of service that an insured gets probably depends more on the individual adjuster than it does on the actual insurance company. And there are good companies out there with bad adjusters and bad companies with good adjusters. And if you have your choice, take the bad company with the good adjuster. But unfortunately, you don't have a choice.
Yeah, you know, boy, is that ever true. And I just, you know, people ask us all the time at United Policyholders, who's a good insurance company? And I say, you know what? It really, the most important thing is the personality and the training and expertise of the adjuster that gets assigned to your claim. plus your own willingness, to really go to the mat and, fight for what, what you're owed. And that's what we're here for, to help you with that. So we're not going to go into much more detail here because we still have some good amount of stuff I want to get through. But just know that the reason that depreciation matters in a lot of cases is sometimes that's all you're ever going to get is the depreciated value for some items, depending on how your policy is worded. But also because it's a cash flow issue. You generally need the cash. And often, people want to really they want to put this thing behind them as fast as they can. And so sometimes they do not go back and submit proof of receipts and expenditures to collect the balance of what they're owed. So it does matter. Unfair depreciation does matter. All right. So we want to remind you that those first check that you got, you should think of it as a starting point, especially at this stage, that, if you're a 2021 loss, you are still kind of in the early stages. So yeah, just keep on going. So this is just a recap of what we've been talking about, that typically these days, your adjuster may try to whack up a exactament estimate, sometimes even on the spot when they meet with you. But it really does depend on your adjuster. But the scope that Sandy's going to be talking about a little bit more in detail now soon is different from an estimate or bid, right? The scope is really, it describes and an estimate puts a price tag on. So that's kind of the difference. All right. So Sandy, you want to explain this slide?
Yeah. So a lot of you, hopefully, at least you've received something from your insurance company that's trying to estimate the value of the home that you lost. Like I said, they do have the obligation to do it. A lot of people are super overwhelmed when they get it. It's, some people say, well, it's 80 pages. It's hard to understand. There's a lot of facts and figures on there. A lot of people go straight to the first page or the last page, whatever pages have the number at the bottom, and then are very concerned when they see the number at the bottom. So what we're going to do is try to help you kind of break that down a little bit, what to do, where to start, how to sort of understand it, what you might want to do if there's a big gap between your contractor's bid and the insurance company's bid, what to do if you have an impasse. What do you do?
Okay, I get it. I get it, Sandy. That's a chicken with the where do you start? Chicken or the end? I'm a little slow. I get the little image there. Okay. All right. A scope of loss that accurately documents your full loss and related costs, right?
Yeah.
That's what we're going to talk about now.
Yeah. And so one of the things that I encourage people to do, it's hard not to focus on the money because the money really is the bottom line and it's what you need. But in order to get this right, it's better really to focus not on the money, but on what they used to get to the money. Okay. And so in order to do that, in order to really compare with your builder, you need to do something that's sort of apples to apples. You need to get your insurance company to have an accurate representation of what you lost. But builders don't use Xactimate. Bob talked about that before. Xactimate's garbage in, garbage out. It can be a really useful tool. It can be, absolutely worthless. So in order to compare and reconcile them, you really need to get your insurer to a place where they are accurately describing your property. Okay, and that's what we want to try to help you do. Go ahead.
Okay.
So our goal, we want to start with the scope, and our goal is to fix your adjuster's estimate to accurately reflect what you lost. Okay. And like I said, don't worry about the numbers in the beginning, focus on the details. Okay, this is the most important thing. And I was chatting in the chat here with Gary, you know, he's trying to do it. Some insurers actually refuse to edit the estimate. They have an absolute duty to adjust it and to keep working with you on it. So don't give up, okay? Keep after them, and I'll show you how. Okay, so dollars are in the details. It's really important. So you guys know, how long did your adjuster spend at the property in order to produce the estimate that they gave you? A lot of times it's a very short period of time. Some adjusters do a nice in-depth interview of what kind of finishes, but it's really important that you sort of force these details on your adjuster, okay? A lot of times people, you know, get really frustrated and they say, well, you know, I have a 4-bedroom, 3-bath house and there's only 2 bathrooms on this estimate. They don't even have the right this or that. So you need to sit down with them, talk about the sizes and shapes of the rooms. How many rooms did you have? What kind of finishes did you have? And get your hands on whatever information that you possibly can to describe your property. Okay, and then, you know, don't exaggerate or pad. That goes without saying. Go to the next one. And Barbara, we see your hand raised. We'll go at the end there. This is a list of things that you might be able to use to help you show your adjuster what your house looks like. Some people have plans. Sometimes the building department has plans. Just depends. Photos. So people are like, well, I didn't photograph my house. But think about, you know, your kids' birthday parties. Sometimes just pictures of the family sitting by the tree will show you a window, a wall, you know, floor coverings and all of that. You can do verbal descriptions, get Google Earth, get Zillow, you know, Eagle View, all of these. Google Earth has a timeline, so it can kind of show the size of the house. All
What's
of that.
draft tech?
I have no idea. Someone else put that on the slide.
All right, so document. Go ahead. I'm ready for you here. All right,
yeah.
so go ahead.
Oh, okay. So yeah, so what you want to do is describe your dwelling in detail. So ignore your contents. So what I do is I tell people to start with, you know, sort of a visualization process. And I recommend generally, and to get yourself used to the process, is start with your bedroom, your own bedroom, because for a couple of reasons. First off, if you're like me, you're familiar with it because I spend a lot of time there, especially during COVID. And also bedrooms tend to be simpler rooms. You don't want to start with a kitchen or a bathroom. They're harder. So think about your room and be systematic, okay? Either start at the ceiling and work down, or start at the floor and work up, and think about what kind of flooring do I have? Don't worry about the structural part, because those things can be filled in. Like generally, you know, certain types of construction have, you know, either a slab foundation or a raised, you know, wood subfloor, whatever. Don't worry about that. Worry about your finishes. So what do you have on your floor? How big were your baseboards? You know, these are things that really add up. You know, do you have beams? How high is your ceiling? Xactimate defaults automatically to 8 feet. So if you have higher than 8-foot ceilings, or you have like vaulted, a lot of these, you know, country places have nice open beam. Those have to be put in, okay? So do that, do how many doors, how many windows, all of that. And then once you do that with your room, you'll find it easier. Do the easy rooms first, then once you get used to it, it gets easier. And then you can think about like your kitchen, and think about just piece by piece, start at the floor. And like, think about where your outlets are. How many outlets do you have? How many light switches? Then get to your cabinets. What are your drawer pulls like? So all of these things are in the details. You know, I rebuilt my house a couple years ago, and just drawer pulls cost a few $100s. It's like there's a bunch of them. So doors and trim, baseboards, ornaments, and then things like texture on your drywall. Do you have smooth drywall? Do you have textured drywall? How's your paint? lighting, windows, switches. So you just do a visualization exercise and get it, and then compare it to what they have. Go into that room and try to look. If I always say you can tell how good an adjuster is at their job by how systematically they have estimated the rooms. You can see, you should be able to see. So if you get into your estimate and you've got like a ceiling light fixture, and then you got some baseboards, and then you got some windows, then you know that you're dealing with somebody who doesn't know how to estimate. If you go and you see, okay, we have wood flooring, we have 4-inch baseboard, we have, 8 windows. If you can see the progression, either from the ceiling down or the floor up, you'll know you're dealing with somebody who kind of knows what they're doing. Okay. So this is an example, and I like to, now depending on how cooperative your adjuster is, this is something I like to ask my adjuster for. Ask them for a scope of loss. It's a button that they push on their computer, which just takes the numbers off, and it gives you a little bit more room to look at things. And so when we're talking about doing this, this is just a pantry. This is a small room. You just check the dimensions right here. It's 7 foot 8 inches this way. It's 7 inches this way. You can see the doorway. It's hard to read, but it's 2.6. Up here is a ceiling height. So this is a high ceilinged house. So if you have one, look there. And this automatically, based on this diagram, calculates the square footage. Now, under things like underlayment and floor preparation, don't worry, but look at what kind of flooring do you have? Well, this one has vinyl plank flooring. They even knew the name of the brand of their flooring. And so they know it was a premium grade. You check the square footage. You've got 8-inch baseboard that's 2 pieces. So the price for this is a lot different than, say, that MDF, the particle board, sort of small baseboard. So then just go through this. And once you start doing it, and you can see here, we've got underlayment, floor, flooring, baseboard, shelving, drywall. You can see how it's working up. I did it, so obviously it's in good order. But that's kind of what you should be looking for. So next slide. So this is what you want to do. And sorry for the scribbles, but what you want to do is you want to make a correction. So make a copy of the estimate that you have, and just mark it up. Get a red pen, mark it up like you're a school teacher. Okay, the people are like, wait, we have 12-inch ceilings. This guy measured them at 10.6. Our hardwood floor was actually 12 inches. Things like this just says detach and reset. Well, this whole door needed to go. So just make corrections right on it. Then make another copy for yourself of the corrections and send it into your insurer and ask them to make the adjustments. Okay, so this is after they, and I should have done one with the totals before and after, but this is after they did the corrections. And then this is one showing not only the quantity, but how much they're charging to remove it, how much to replace it. Tax, this is overhead and profit, and this is the total. Remember the replace price and exactament, it's called unit pricing. So it is materials plus labor. So if you go and you see that your vinyl flooring is, $10 a square foot just to buy it at the store, that only gives you $2.50 to put it down. So that would be something that you'd want to look at. Okay, so trade summary. So once you've gone through and you've made these corrections, go do it as many times as you need. And I know it's daunting. I know there's a lot to it, but you're really the best person to know what you lost and what was in your house. In the old days, we used to meet with the people, and we'd sit down at the table and we would go through each room and say, okay, well, I estimated, this, that, and the other thing, and we'd make the corrections there and go back and fix them. Unfortunately, these days, that would be a pretty tough thing. Now, if you have an independent adjuster or somebody in your area, ask them if they'll come over and go through it with you. It's something that should be asked. But once you've done it, you've gone back and forth and you've gotten pretty close, ask them to give you this recap by category. It's also called a trade summary. And this is a document that will help you compare to your contractors' bids, because contractors, like we said, don't do those line item estimates with unit pricing. So this is going to give you an idea how much has been allowed for appliances, cabinetry, cleaning. You know, this wasn't a total loss. This is just a partial loss. And then this can be used to compare. Then once you get a contractor's bid, sort of compare and look and say, oh, wow. So I have, you know, there's $16,000 here for finished carpentry, and my contractor has 25,000. And you can go and see where the differences are and hit the differences where there's a bigger variation. So, you know, if there's areas where you're only off a little bit, don't worry about it. And then that'll help you get to this bottom line here. Okay. Closing the gap. So the gap occurs when the insurance company's scope of loss is less than what it's going to actually cost to replace your home. Okay. So what you want to do is you want to, you know, fix the estimate. Okay. And really work on it and keep after them. They have an obligation to do it. Get and present to your insurer detailed written estimates from reputable builders. It breaks my heart that people have to pay for these now. It was never like that before. Unfortunately, it's a fact of life. But my point is, you know, if you have to pay, you know, to 1% or 2%, then you still get, you know, a percentage of something is better than a percentage of nothing. So it really, you have to weigh how much you have left available on your policy with how much it's going to cost you to get one of those estimates and see if it's worth your while. If you only have $2,000 left to collect on your policy, you don't want to spend $5,000 or $10,000 to get a bid. So you guys can figure that out. Really try to set up a face-to-face meeting with your contractor and your insurance adjuster to discuss these differences, and then consider hiring an expert if you need to. Okay.
That's what Bob and I were talking about earlier, that it might be worth spending that money.
It might. And in areas where you have, like, say, for instance, you know, your contractor's roof bid is 40,000 and the insurance company's contractor's roof bid is 10,000. You maybe don't have to get a full estimate. Maybe you can just get a roofer to estimate. You can get a sub bid for that, just that one thing. And that's why that trade summary that we had up earlier, that's why it's really important to sort of look at that and get, you know, your contractor to sort of break it down so you can do some comparison and really identify and focus on only the places with the big gaps. Okay. So this is kind of all the things we've gone through before, just reiterating, you know, the different things that you can use to establish your fair replacement value.
Sandy, I'd like to make a pitch. If you could go back a couple slides to your trade summary, I think there's some important points here. So this trade summary basically is looking just at hard costs for appliances and drywall and electrical, et cetera. What I have seen in a lot of these is that the insurance companies, whether by intention or just oversight, leave out what contractors call soft costs. And those can be substantial. And they can, just as an example, they can include architecture and engineering fees, porta potty through the life of the construction, temporary heat, temporary power, building permit, project management, a trash dumpster, builder's risk insurance, and the list goes on. But those are all costs that a legitimate contractor will be charging you for. And so it's part of your rebuilding cost. And I'm seeing in most of these trade summaries that those items just get left out.
Yeah, in fact, you'll see some insurers that leave them as open items. Okay. And so in the old days, it was okay. Like if your house just was by itself and it burned down and they wanted to leave the engineering or permit fees or something like that, one of those soft costs open until they actually had to go and get the permit or the engineer or whatever, that's fine. And then the insurance company would pay it. The problem is they kind of got used to leaving them open, and then now they're leaving them open and they're telling policyholders that they're not entitled to them until they incur them, which is exactly where Amy was saying, show me where it says that in the policy, because it doesn't say that in any of the policies. Okay. And those are owed and they can be estimated just like anything else.
Yes.
And I'm really glad you brought that point up, Bob, because we've seen people that have been told that. And those soft costs are absolutely part of the reconstruction, and they're part of the actual cash value of your loss, and because they can't be
Yes.
depreciated, most of them are all labor. So make
And
sure those are in there. Thank you so much.
This
for
is a
bringing that up.
perfect point to my earlier comment about you should hope you get a good adjuster.
Yeah.
So I've looked at the scopes of loss from 2 different adjusters for State Farm, one of whom was very meticulous about things like dumpsters and porta potties and temporary power and so forth. And then you see a similar estimate from another adjuster also with State Farm, and there's no mention of any of that in there. So
Yep.
if the insured isn't aware of this and doesn't really push for it, they're never going to get the money.
Great points, and kind of a theme here. You heard Sandy talk about there's how the drawer pulls add up. You heard Bob talk about how some of the things that are missing from this list, and you heard me say earlier that good on you for being with us this evening and educating yourself so that you can advocate for a full and fair payout on your assets, that you insured. I mean, you took the responsibility to buy insurance and to protect yourself. And now, we're here to help you get every measure of that protection that you paid for. So we talked about how you close the gap, establishing a fair replacement value. We're just going to hit a few lessons learned. That sort of, these are things, over the years that we have noticed some of the mistakes people make, and some suggestions that we can offer for avoiding them. So taking your time when you're detailing your assets that were damaged or destroyed. On the mortgage front, there is most banks, and no one may have told you this. There's something called forbearance that you can request, meaning if you're having trouble making your mortgage payments, rather than using your insurance money to pay down prematurely your mortgage, we really recommend you use that money to replace your dwelling and not pay down or pay off your mortgage. You're not obligated to pay to change the payment schedule at all. Just because your home is not there, it's not like the mortgage company can accelerate your mortgage payments. Only if it makes sense. You can pay off your mortgage so all the checks come directly to you, but that's an individual personal decision that you should make, and you shouldn't get pressured, certainly not by an adjuster, with regard to your mortgage. We've talked about how important it is to document everything in writing and keep copies. When you ask for something from your adjuster and the adjuster says no, that doesn't have to be the last word. That's where you become that squeaky wheel. You speak up. You say, I've given you this documentation, and you are persistent. You write those letters the way we kind of suggested in the beginning, very professional, straight and to the point, without a lot of emotion. Make your best case. We have talked in our previous workshops, if you haven't been with us, we've talked about how useful the Department of Insurance can be on things, because, and it's free to use their help. We'll have a slide right towards the end that gives you their toll-free number. They are there, they have a hotline. And if you are having a hard time with an adjuster, they are a free resource. So you're not on your own here. Not only do you have us, we have your back, we're rooting for you, but there's also a state agency, the California Department of Insurance, the Colorado Department of Insurance, that are pretty proactive. Those are two of the states that are very pro-consumer. The insurance departments they want to help you. They will if they can. They can't be your free lawyer, but they will definitely help you resolve things. Like if you need an extension of time to submit documentation that your insurer is asking, and the insurer is giving you a hard time, that's a great time to file a request for assistance with your state insurance department. It's really common to ask for things and have them be denied. So, our advice, the words we use, politely assertive or politely persistent, and just be that squeaky wheel that gets paid. Just to recap some of the things we've been talking about, you are aiming to agree on the cost of replacing what you had. And it's very common that people get off track in their negotiations with their insurers because they're not talking about apples to apples. You don't want to put back the exact same house. The insurance company knows that. And yet you've got to come to an agreement on that number. And a lot of adjusters will even skip over it, and you'll get into problems because you'll be talking about a different kind of house. And we don't want you to get off track in that way. For those of you who are in California, you do have always the right to request copies of your claim related documents. And we really encourage you to do that. We give you a sample letter for that purpose. I like to keep this slide in our decks lately because it really, I think it's really good advice. This is from one of our volunteers who lost a home in 2003 in San Diego. The loss of your home is it's a deeply emotional loss, and emotion is the enemy of a good business deal. So when dealing with insurers, the more you resist emotional decisions, the better it will turn out. Don't let the insurance company profit off of your emotions, right? And a lot of what we're here to give you is just really practical advice. So here's some of the other publications you can take a look at that were written by people like Bob, who kind of went through it, picked up some knowledge along the way that they want to share, pass along, not written by lawyers. These are written by real people. Ideas. I really like observations from a teenage wildfire survivor. You have kids, and you're trying to figure out how do you involve them in this process? Do you shelter them? Some observations that might be helpful to you there. Also some observations about coping with underinsurance. So these are the three previous webinars in this series of 2021 California Wildfire Roadmap to Recovery webinars. We also had, we did a whole series for the 2020s. We are doing a series for Colorado. They're all free to watch the recordings and look at the slide decks on our website. These are the links for just this series. But those of you who are in Colorado, we have been offering workshops from the get-go. And on many of our webinars, we have people from the Department of Insurance, so both in Colorado and also in California. And they're another source of help. Upcoming events, similar in the series of support offerings that we are providing. Actually, right now, if you haven't had enough Zoom, we're actually doing a survivor forum tonight. These are informal survivor, just people talking amongst themselves, sharing information. The information up here is for the December 7th one, but if you wanted to try to jump on tonight, you can go to our website and you can find the link and you can register, and it'll automatically, I think, let you in. And then coming up on December 8th, we will be doing another webinar like this, a class, and we'll be focusing on the contents portion of your claim. Tonight, we're talking about dwelling. On December 8th, we'll be talking about contents. But before that, while you're still recovering from your Thanksgiving meal, you can have more quality time with Super Sandy, asking questions and getting answers one-on-one. So I know we had a lot of questions in the chat. I think we did our best to answer all of them. We also have coming up in December, although it's not on here, we will be doing a pro bono legal clinic. So just actually December 15th. So the best thing, and that's where if you have a legal issue that you want to review with a lawyer, you can send us a request to get an appointment for one of those one-on-ones with a volunteer lawyer. The best way to stay informed is to send us your email address, to send an email info@uphelp.org. If you're here tonight, that means we already have your email address in our system. But it's always a good idea to go on our website from time to time, right on the homepage. There's an events section, and you can click on that and see what we've got coming up, and everything is free of charge. For those of you in California, here is the DOI, the Department of Insurance, toll-free hotline for free assistance with your claims. So I want to just give a quick shout out to the Rural County Representatives of California and the Golden State Finance Authority that gave us a grant to help us bring this information to you this year. And I just really, Bob, I just want to thank you from the bottom of my heart for coming on and being willing to help us out. I know you're not done yet with your journey, so thanks especially.
No, glad to do it.
Okay, and Sandy, thank you so much for sharing your expertise, and then to Elise for helping us get questions answered. Are we good, Sandy? Did we hit everybody in the queue?
I think we did. I think we did.
I think we did.
So
All right. Well, I want to wish you all a safe and pleasant rest of your evening, and thank you for your time and attention. And the recording of tonight and the slide deck will be up on our website later this week. And again, we are rooting for you. Good evening.
good night.